Hey, everybody. Welcome to another episode of the Profitable Home Services Podcast. I'm so glad you chose to spend part of your day with us again today. My guest today was on our podcast, last year sometime, and he is so good that we thought we needed to bring him back and explore some of the topics we talked about before, maybe in a little more detail. So I'm so happy to have on today's show Randy Sadler from CIC Services. And in full disclosure, Randy and I have known each other for 10, 15 years.
Yeah, about a
Long
decade.
time.
Yeah,
Yeah. And we have
definitely.
done some work together. When I'm not plugging profit leaks for people, I am helping them pay the least amount of tax they can legally pay through tax planning. And Randy is one of my preferred tax planning partners. And so we thought it was fitting, as this is October, November-ish time as we're recording this episode, to bring in a tax planning topic where we can still find a profit planning leak, I'm sure, as we hit to the end of this episode, but a tax planning topic to help you put more of those dollars back in your pocket, because I know you work so hard for them. And we want to help you keep as many of them as you can while enriching your business and giving it the coverage that it needs, so you're not hanging out there with a lot of potential liability. So, Randy, welcome to the show.
Diane, it's a pleasure to be here.
So Randy, let's step back for those who may not have heard your first episode, or they heard it and it's like, oh, that was almost a year ago. Let's do a brief overview of what is a captive insurance plan and why would a home service business need one or want one? And then we'll head off into our topic for today.
Sounds good. Yeah, I'll dive in with that. A captive is really a choice to own your own insurance company, which may seem a little daunting at first, but it's really not. Successful small and middle market businesses can actually set up and own an insurance company that can self-insure their business. What's great about this is that very often we can help businesses save money on their insurance costs that they're already paying. So that's potentially a profit leak right there, right? Very often we can help them even save money on things like healthcare. That's another potential profit leak that we can plug. In many cases, businesses are offering somebody else's warranty, or they're not fully maximizing their warranty work. And so we can utilize their own insurance company to kind of turbocharge their warranty, make it a lot more profitable, which we'll talk about in a little bit later in the podcast as well. So just imagine, step back, picture that you own your business, you're successful, you're working very hard, right? Now you own your own insurance company. You're able to buy insurance from yourself. You're able to lower many of the costs that you have. And one of the added benefits of owning your own insurance company is asset protection, in that you're able to wall off money in a separate entity that's very difficult for creditors to attach to. And another benefit, and this obviously will require you to consult your tax advisor because I'm not a CPA, but another benefit is that insurance companies receive favorable tax treatment. So, provided that your insurance company is operated like a legitimate insurance company, then you can elect to be taxed as an insurance company. So, imagine just for a second, if you drive into most major cities, look at the skyline. The largest buildings typically are maybe the football stadium, banks, and you guessed it, insurance companies. So there's a reason for that. Part of that is just receiving large amounts of money, not paying claims till later, investing and growing that money, but also even large insurance companies like State Farm and Allstate take advantage of the insurance and the tax benefits of owning an insurance company combined. Interestingly, you can do the same on a smaller scale, and this is why it's such a wonderful strategy that middle market companies should employ.
And I will say I've got a few of my clients using this strategy where they've been able to insure themselves for liabilities that they more than likely couldn't have afforded to insure for out on the open market.
Yeah, very good point.
So, loving the concept, loving the strategies, and of course, working with Randy and his team has been amazing over the years.
We've really enjoyed working with you, Diane. You've got some wonderful clients that are, out working really hard, and you don't really have the time that they need to invest. They're so busy running their business, right, that it's easy to miss money going out the door, right? And so, I know you do a wonderful job bringing them strategies to help them capture more of their profits, plug those leaks, and of course they benefit, and their employees benefit too, frankly, because a more profitable company, it just doesn't take care of the owners; it takes care of everybody better. Yeah,
It does, right?
yeah,
Ra-
absolutely.
Randy, as we were talking before we went live, you came up with a concept that's probably a new concept for most people, is that once you have your own insurance company or your captive insurance company set up, you potentially can have another profit center over there. Tell us a little
Yeah.
bit how that works.
Yeah, that's a very good point. So, we talk about this on our website. It's really, create a second profit center, or start a second business to create a new profit center. Interestingly, one way to think about it is sort of to step back and think about what they call vertical integration. If you had a CFO in a large company, they often think about, vertically integrating their supply chain. So if I make cars, and then I buy a engine manufacturer, or I start my own. Now I'm making profit twice, right? Because when they were selling me the engine, they had profit built in there that I paid them. Now that I'm making the engine myself and I make the car, I basically take the profit that was already being made in the engine, right? I also increase my control because now I control the engine manufacturer. I'm not, since I control them, they're not going to turn around and sell to my competitor, and then maybe even cut me off, right? So you can do the same thing with your insurance. You can vertically integrate insurance where you own your own insurance company and you write a check over to your insurance company. So let's just use a hypothetical number. Let's say you buy $300,000 of insurance across a wide range of coverages, right? So the first place that you're going to get a benefit normally is saving on your insurance cost, right? And so we're going to focus on how to help you do that. That can be across warranties, it can be across healthcare, property casualty risk, very often in home service providers, general liability is a great place to save as well. So you're hopefully going to save some insurance costs. We'll focus on doing that. And then the second benefit, though, very often is that insurance companies, provided that they're legitimate and your tax advisor recommends that you do so, can be taxed as insurance companies. So imagine, if you will, taking a deduction for $300,000 from the parent company, which is going to reduce your profit a little bit in your parent company. But then your insurance company elects to be taxed as an insurance company, right? So after claims paid, after operations, your insurance company may have, in many cases, let's say $240,000 left in it, right? Well, if you had simply kept the 300 in your core business, and you'd been taxed at, let's say, 40%, you'd only have 180 left there. So by owning an insurance company, even with the cost of running it in claims, you have 240 where you would have only had 180. So do that every year and do it at scale, and it's a separate profit center.
That is a really cool concept. I love that. And one that I know I'm guilty of not fully explaining that to clients when I broach the idea of a captive insurance company for them.
Absolutely.
Oh,
Yeah,
yeah.
it's quite a win-win. Absolutely.
And I know that when you put that together, I think the term you were using as we were talking offline was found money. Money that we didn't even realize could be turned around and repurposed and used in a different way.
There's lots of ways that a captive can create found money. If you're in the home service industry in particular, if you have subcontractors, and we have quite a few clients that do have subcontractors, very often those subcontractors may be required to buy subcontractor default insurance, right, or subcontractor default bonds. We have quite a few clients that have those subcontractors buy from their captive. So instead of buying a subcontractor bond or default insurance policy from a third party insurance company, They buy it from the home service provider or contractor's captive, and so now they've created found money, right? Now, obviously, you need to manage your subs well because if they tube on you, the claim's going to be coming from your insurance company, right? But many manage their subs really well and have those bonds in place or that are sub default coverage. Well, that's found money, and over the years, that can really pile up. Another place that we see found money is offering is replacing somebody else's warranty with your warranty. So very often and I'll give you a quick example. We had an HVAC contractor, and they had a 5-year warranty from the manufacturer. So they sold the client a 10-year warranty and backed it up in their captive, right? So the client was willing to pay more to know they're going to be covered 10 years. Of course, the HVAC contractor said in their clause for the warranty, we've got to come out twice a year to service it in the spring and the fall, clean the coils, make sure that nothing's running hot, right? Do all the checks that we do. Well, now they have guaranteed 2 stops a year out there, so they're getting paid for that twice a year. And the client's doing it because they're getting a 10-year warranty. But when they bought the warranty, the HVAC contractor put that into their captive, so they didn't pay tax on it, right? They took a deduction to put it over into the insurance company. That way, the money can grow in case they ever have to pay a claim in the future. So let's say you're 7 or 8, maybe they have to go out and maybe change out a capacitor or something. The money's already in the captive to pay for it, but it's been growing for 7 years, right? Courtesy of the client paying you 7 years ago, right? So that is a great way to create found money. And so the possibilities become almost limitless when you own your own insurance company and start thinking about ways to get more mileage out of it.
So can you think of some ideas for maybe a roofing company?
Yeah, roofing is very similar. Most roofing contractors will give you, say, a year warranty, maybe a little bit more, but you could do the same thing, sell an extended warranty, right? And usually when there's a problem, you're just going to come out and fix it, right? You're not going to just but you're not going to do that beyond a certain point. So you have a client buy that extended warranty, put that into a captive, and then grow that money, right? You're not paying taxes on it because it's in the captive. That lets you grow it so that when that rainy day comes and you've got to go fix somebody's roof, you're just going to file a claim on your own insurance company, but you got to hold that money all that time and invest it. And interestingly, many homeowners, business owners, property owners, they will pay a little more for peace of mind and just know and really in reality they would be better off saving the money themselves and investing it, right? But it's amazing all across America, just consumers are willing to pay for peace of mind, and they do. So they give you the money so you can invest and grow it, and that's a sweet deal.
That is.
Yeah,
And and the big caveat there was so you can invest and grow it. How many
right.
times do we not? It just gets absorbed and it's gone.
Yeah.
But with the captive, now we've got a vehicle to invest and absorb it and let it grow for you.
Yeah, that is a great benefit of having an insurance company as well, is there is a deliberate walling off of that money, right? And so it's walled off. If you absolutely need it, you can get it. We can apply to have money dividended back to you in the future. You sell your business and close your insurance company and take all the remaining money out, right? But nevertheless, by walling it off into an insurance company, it drives discipline through your business as well, so that that money just doesn't get spent on something marketing or something, and all of a sudden it's gone. So
Right.
very good point.
Right. I know that you and I have just talked at different times that we've, met at different events and things like that about some of the out of the ordinary types of things that you can insure for when you have your own captive company. Can you share some of those with us?
Absolutely. So there's theoretically nothing a captive can't insure. On the small mid-market space, there's really two coverages that we struggle to insure, and usually we don't. The first would be auto liability, and that's just because your state has a consumer protection interest and requires an insurance policy that's been what's called admitted by the state, right? So it's approved by your state. And that's true in work comp too, right? The state has an interest in making sure that if somebody gets hurt, there's really money there to pay. And, they don't trust your captive necessarily. Now, they may in the future if we put enough money in there and go get rated, right? But in the short term, no. But nevertheless, just about everything else could be insured in your insurance company. Your collision on your vehicles, your deductibles on your vehicles, any kind of excess above your, state minimum requirement, you could put that into your insurance company. And then we can often insure property. Now, if you have a bank loan, it's a little harder. But in many cases, we can put property into the captive. General liability, absolutely. And then we can insure a wide range of risks like business interruption, which very often commercial policies simply don't cover. Your supply chain, which is often taken for granted until you have a problem, right? So that's definitely worth insuring. We can also insure any kind of law change that affects you. That's a very different, that's not a coverage you can normally buy in the market.
I
We
love that
can,
one
it is,
because
it's
those
amazing. Yeah,
they
go ahead.
come to they tend to come from out of nowhere, and all of a sudden it's like,
Yeah.
what do you mean you just changed how we have to do business?
Yeah, legal regulatory change. If they
Right.
pass a law and now you have to wear a respirator, well, you've got to go buy them. Now you got to make your employees wear them. They probably are going to want more pay to wear them. So all these costs snowball, right? That would be one example. One of our examples, frankly, in the last well, 5, 6 years was when tariffs were put on products coming from overseas, and that all hit companies' bottom lines, and so that was a regulatory change, and companies were able to file claims for that, which helped them. It gave them time to find another source or set expectations and reset their pricing, right? So just think about all the things that could come your way. That would be another one. Loss of key employee or key employees, very interestingly, there may be people in your business that your best salespeople or somebody in operations that if you lose them, you're going to lose revenue or you're going to spend a lot of money trying to replace them. Those are things you can insure in your own insurance company. We do environmental pollution a lot in the home service space. You do have pollution risk. And so, the number of things that you can insure that are very relevant that will protect you from the unexpected are quite real. Another would be key contracts. You might have a contract with, say, an HVAC supplier, and that contract gets interrupted, and now you've got to settle for selling somebody else's line. Those types of risks are very real and can be insured.
There's a plethora of
Yes, it is.
of
Yes.
things that we can insure for. And your average home service business is only insuring for the minimums because that's all they can afford to insure for.
A lot of it is affordability, and then some of it is sort of the unknown, right? So if we call it a sunk cost. So if I bought insurance, say for supply chain, and the whole year went by, and nothing happened, well, all that money's gone, right? So that was a sunk cost. It went to somebody else. On the other hand, if I write the check to my own insurance company for supply chain, that's very different, right? If there's an event, I'm glad I set the money aside in a tax favored way to deal with the event. If there's not an event, I still keep the money, right? So when you own your own insurance company, instead of it being a sunk cost, it's really kind of a sunk profit in the event that there's no claim. And it changes your outlook on insurance when you own the insurance company.
Yeah, I love that concept. I know, as we're recording this, we're late in the fall of 2024, but COVID still sits back there as a not too distant memory when all of a sudden everything changed. Almost, it felt like it was overnight. So had you had a captive in place, I believe you shared stories with me of some of your people that had captives and they were able to do a claim with their captive and actually get paid, unlike the claims that were denied with more traditional companies.
Absolutely. So what happened during COVID? A lot of businesses were interrupted, right? And so when they filed business interruption claims, the vast majority were told you only can file business interruption if your property is actually damaged, right? So if your building gets knocked down and now you're not operating, you get business interruption. But if the government tells you you can't come to work, it's quite different, right? So many captives did receive business interruption claims. In fact, all of our clients who had a business interruption loss and filed a claim had their claim paid. And COVID was, we paid out about $15 million of claims across about 120 captives at the time to businesses that really needed it, and none of them went out of business. And many of their stories are telling because things that we heard were, I was able to keep my employees, and stay basically afloat during COVID. And a lot of my competitors didn't make it. Not only did the competitors not make it, they never came back. Uh, so yes, during COVID, captives basically were the difference between not only surviving, but sort of like in Forrest Gump, when all the boats get wiped out and they're the only ones that didn't get sunk. Now they were really successful at shrimping. Some of our clients have had the same experience, which, their competitors got wiped out. They survived because of the captive, and now their market share has grown tremendously. Yeah,
Mhm. So
absolutely.
there's a lot of hidden, I think of the right word, a lot of hidden reasons to think about a captive. And I know it's a concept that a lot of home service businesses have never heard about because there's nobody out there with TV ads going, hey, buy a captive. That's just not how
That's
it
right.
works. It's all
That's right.
pretty much word of mouth and some webinars and some things like that on how do you learn about captive?
Great question. I mean, the first thing you can do is ask Diane or me to send you my book. So I'll be glad to send you a book on captive insurance. You raise a good point, which is it's not widely known. The reason it's not widely known, frankly, is if for quite a long time the only companies doing them were large companies, right? So first captive started in the 50s, arguably some might argue earlier in England, but really in the U.S. 50s. Youngstown Steel and Tube in Ohio started using captives, and large corporations followed. And now 90% of Fortune 500 companies have a captive, right? Well, what happened largely started in the 90s, so it's not that long ago. Is that Vermont was one of the first states to start licensing captives to compete with New York, and then other states followed. So now, all over the U.S., I think 38 states will license your insurance company. When if you went back a few decades, it was only one or two. Well, that makes a big difference because those states have realized that to be competitive, they've got to make captives affordable for small, mid-sized businesses, right? And so they are now really economically viable for businesses that are in the home services industry. The best way to learn about captives is to talk with, a seasoned captive manager. A captive manager is simply like a third-party administrator that runs insurance companies for a living. So we set up and run insurance companies. We coordinate third-party professionals on your behalf. And obviously, it's really ideal to have an advisor like Diane who thinks about how to help you run your business better, keep more money, and will know if a captive may be the right strategy for you. Because there's many strategies you can employ to increase your profit and keep more of those profits. And so for many clients, this is a great strategy, at least one you should consider.
I like to think of myself as a connector. I can
Yeah,
connect people,
absolutely.
my clients, especially my coaching clients. I can connect them with people like you, like Randy, have that have a solution to a problem that they're having, and then it becomes a win-win for everybody.
Exactly.
Yeah,
Exactly.
we like to make these businesses stronger, plug their profit leaks, save the money on taxes when we can, and just make a stronger overall business because we know that small businesses is what carries our country. And it's so
Absolutely.
important.
Yeah, the vast majority of new job creation is small, mid-sized companies, and the large Fortune 1,000 companies are wonderful, but typically what they're trying to do is get more efficient. They're often taking jobs overseas, and really it's the small, mid-sized companies in America that create most of the jobs. And that really is the backbone of our way of life. And so we're 100% committed to doing everything we can to help small, mid-sized businesses.
Right.
Yeah,
And say I'm equally as committed as I can to helping our small to mid-size home service businesses as well, because it's so important that we help them get strong and we help them become more profitable, more successful, able to move into a CEO mentality where they're leading their company. It takes a lot of skills to move past whatever it was that they started when when they started doing business, whether they're a roofer, a plumber, an HVAC guy, whatever it was, they started always with the service that they could do. Maybe they worked for a company and went out on their own, but to actually step into that CEO role and be able to now lead this company and lead it in a profitable manner, that's a completely different set of skills. And I just love when I get to work with people like you and others that we've brought on this podcast and make life easier, make it better, make it more successful for these home service business, because I see how hard they work. I'm
absolutely.
talking to them
Yeah,
every single week and see how hard they work.
yeah, absolutely. That's the truth.
So Randy, we always ask the question as we
Huh?
come in
Yeah.
towards the end of a interview, is what is a hidden or unique profit leak that you see as you're working with home service businesses?
Hidden and unique leaks. I think we addressed them, some on our call already, but it's good to recap with that as well. I mean, one of the very obvious leaks is selling somebody else's warranty or not taking advantage of a chance to sell an extended warranty, right? And so doing that and then putting it into your own insurance company as insurance premiums and walling it off and then taking it. So not only are we creating a new profit center via selling a warranty or selling somebody, replacing somebody else's with your own, right? Now that's found money right there. Then by buying insurance, we're walling it off so we don't spend it inadvertently, but we're also taking advantage of the tax benefits of insurance, right? So you combine all that, and we've really headed off a large profit leak. And so not only are we making more profit, but it's not just what you make, it's what you keep. And so being able to take advantage of the tax benefits of insurance helps a lot as well.
Right. So thank you very much.
Yeah,
And thank you for sharing that profit leak with us. We are compiling this amazing list of profit leaks that we've received from our different podcast guests. And at some point, we'll be doing something with that list. But that's a very good profit leak. And thank you for sharing that with us.
my
What is
pleasure.
what is the best way for somebody to reach out to you if they're interested in exploring captive insurance for their home service business?
Really, the best way to reach me is email. It's Randy, Randy, at CIC Services LLC.com. That's the best way. You can definitely find me on LinkedIn as well, or go to our website and then come through the web page and ask for me. And that's www.cicservicesllc.com.
And I will add that if for some reason you can't get there from that direction, just reach out through our connection button and we will get you over to Randy. So,
Absolutely.
yeah, there's lots of different
Yep.
ways to get
That's
there.
right. Reach out
And
to Diane. That's right. There
and
you go.
they'll help you get that educational piece that you need to understand how a captive might possibly benefit your company. Before we wrap this up, there's a question that's been sitting in the back of my mind, and I know I've asked it to you lots of times over the years. But Randy, how big in top line revenue does a home service company need to be before it makes sense to start investing in a captive?
That's a great question, Diane. Really 5 million or more in revenue is typically going to create enough warranty exposure, enough other insurance exposures, potentially healthcare and property casualty risk, where a captive can really make sense. And combination of insurance savings, right? Found money, maybe by selling a warranty, and then the tax benefit. All those things added up will far outweigh the cost to run the insurance company.
Okay.
So that's a good number to work. Start from there.
All right. Thanks for
Yeah.
clarifying that because I
Yeah.
could just see that somebody's thinking,
Yeah.
am I big enough to be able to participate in a captive? And I know
Yeah.
I've talked to many businesses over the years that were not quite at 1 million or maybe 2 million, and they're just not quite there yet
Yeah.
to make it
Unfortunately,
pencil
insurance.
out.
Yeah, insurance companies have some costs to run them that we just can't get around. There's going to obviously be an attorney forming that corporation and drafting insurance policies, underwriting and actuaries that price out the coverages, the things that applying for an insurance license, doing tax audit on a separate business every year. So there's just some costs that we have to do to be real insurance. And so, that's definitely, I wish it was like running a health savings account, it didn't cost that much, but unfortunately, it's not that easy. Yeah.
Okay. Well, thank you again, Randy, for coming on the program today and helping us understand maybe a little more in depth of how a captive works. For anybody who's interested, the clock is ticking. And if we're interested at all, I'd say quickly reach out to Randy so we have time to put a plan in place before the end of the year. I know that just because I've worked with him at this time of year, lots of times, sometimes clients don't get things done as quickly as we'd like them to. And it makes a lot of stress on Randy and his team. So if you're interested at all, please reach out to Randy immediately. And there is still enough time as of right now that we could get it through for the year for you, but that time is evaporating quickly on us.
Slipping away.
Slipping away, slip sliding away, huh?
That's right.
All right.
All
Well,
right.
thank you again,
Yeah.
Randy, for joining us today. Thank you, each of you guys, for listening, for reaching out with your comments. We hear you, we see you, and we care about you. Remember, it's not how much in that top line revenue. That's not your most important number. Your most important number is how much of that are you able to keep.
Should
Our
keep.
goal
Yep.
is to help you increase that bottom line profit and to grow your company and be more successful. If you check the show notes, I am sure there is another free giveaway for you. We've been working on some little fun things to give away. So be sure to check the show notes and see what we have available for you in this episode. Thank you again for joining us, and we'll catch you on the next episode of the Profitable Home Services Podcast. Bye, everybody.